Happy June, everybody. I got a graph. If you're in the real estate market or thinking about buying a home, there's one graph in here that will show that it is a great time. And we've been saying it and just reinforces. So this shouldn't be news to you. If you watch these on a regular basis, it shouldn't be news, but share this with folks that are thinking about buying. But before we get to that, let's just talk rates. Look at the volatility, man. We've had about 3 weeks, 2.5 to 3 weeks of just getting beat down. Remember, down is bad, guys. Green is good, red is bad. So this means higher rates for the last couple of weeks until the nice little bounce we've had in the last, basically this week. Why? Most of this is because of the debt ceiling. So it looks like everybody's playing nice and it's about to get finalized today. So that's good and that's behind us. So that's certainly helped us out. And you can even then see today, this little red candle being Friday. Why am I a day late and typically recording this? Is because we wanted to wait for the jobs report. And that's what this little graph here at the end shows. Talk about that more in a second. Where are rates now? So as of this moment, Mortgage News Daily shows rates at 6.88. That typically does have some form of points. FreddieMac.com shows them at 6.79. Remember, Freddie Mac only updates about once, or not about, it only does update once a week on Thursdays. So the point is, rates are in the high sixes. They do have some form of points that go with it. But here's why I showed you that candle where it had really tall, like skinny little things. It shows because the reason why it was red, it's still down. It was a blockbuster headline number. The first Friday of every month is when the job reports data comes out. So the Bureau of Labor and Statistics comes out and says, here's how many jobs were created. There's two types of surveys. One, they do the established survey where they kind of, use these models and projections. And then they do a household survey where they actually call people to say, did you have a job? Did you lose your job? Well, the numbers are drastically different. So the blockbuster, the headline, the attention one showed 339,000 jobs getting created. That is bad for us. Why? Because in the mortgage world, inflation makes our rates go higher. If there are that many people truly getting jobs right now, that is inflationary. That's where employers have to pay more money to hire people because people, a lot of people out there getting jobs and getting all this stuff. So, and the economy is doing really well. So that's inflationary. However, if you believe the household survey, then obviously that means that the economy could be softening, which is deflationary, because if people start losing jobs, you don't have to hire that new employer. You don't have to give the raises you want to get. You don't have to give. So it's deflationary. So here's the biggest thing, the very last thing on here. The unemployment number went up from 3.4 to 3.7. That's a big deal. Why is that a big deal? Again, unemployment typically means softer economy. Higher inflation or lower inflation is soon coming. Recession, statistically, when you see the unemployment turn from the lowest unemployment number and it turns up and it stays up, typically within 6 months, you'll see a recession. So this could be the start of making it official to where recession is not just coming. It may already start becoming real here in the very near future. So all that's to say, let's talk about the graph I was mentioning earlier, home prices. You guys can see January, February, March. These are all different companies that measure house appreciation. FHFA, just so you guys know, that's basically anybody with a normal conforming mortgage. So the Case-Shiller up above is like including cash buyers. FHFA only tracks homes that actually have a mortgage on it. And then you can see the others. Guys, if you annualize this, it's about, depending on which one you want to pick, it's about a 4 to 5% appreciation. And from the very peak, just taking Case-Shiller and FHFA, from the very, very peak of where housing prices were, we've dropped a mighty 2.3%. And for the loans or for houses with mortgages on them, it's actually increased since the peak. And why the discrepancy? Think about it. Somebody's paying cash, they can negotiate and get a lower purchase price than maybe what the seller wants to do because they can close quickly. So a lot of this has to do with maybe investment properties or people paying cash, getting a little better deal. So maybe that's why the appreciation is not so much compared to FHFA. But check this out. This is what I think I would show everybody, every potential home buyer. If you're out there as a real estate professional or home builder, Texas right now is still showing about a 5% appreciation. So that means today's $500,000 home here in the Metroplex is going to cost $525,000. We've been saying that Texas is great. We've been saying for the most part, home buying across the country is great. There are certainly small little pockets where things have dropped 20% like San Francisco, but the reality is overall, big picture, it is a great time to buy. There is still a shortage of housing. Nothing's fixing that in the near future. So when there are more buyers, then there are sellers that is supply and demand will make the prices go higher. Even if rates are elevated right now, they will eventually come down. So buy now before everybody else comes back out of the woodworks. Because if and when rates do come down, and it's when, and I think here in the next 6 to 12 months, more and more people are going to try to buy because the affordability comes back and this goes up even more. And by the way, shout out to South Dakota. Check that out at 8%. All right, guys, here's the other thing. I saw this article in Texas Monthly. Fort Worth is basically becoming the new Austin. So population growth is insane. Even my wife and I were just trying to figure out, maybe we do a staycation over in Fort Worth here, coincidentally, before that article came out. So shout out to Fort Worth. If you're in North Texas, we're getting another HEB. I know it's a big deal. That's many of you ladies out there are HEB fans, and I'm told it's great. And here's another one. Lastly, guys, I thought this was funny. This is where I'm trying to stay young, trying to stay youthful. The ladies in my office keep me this way. Apparently there's something, what they call it, stealth wealth, where you don't have to brag about your net worth or your richness. And the way you do it is just by small, stealthy ways of doing it. And apparently, number 4, no iPhone case. So if you don't have an iPhone case on your phone, it's not because you're dumb or stupid. It's just because you got so much money, you don't care, apparently, supposedly. So there you go, guys. Follow us on social. Again, like us, subscribe, forward, share, all that fun stuff you're supposed to do so that my marketing people are happy. We appreciate you as always. Have a great weekend. And as always, when you think mortgage, think Mark.